Hey everyone, this is Wesley from Debt Free with Wesley. Thanks for tuning in. In today's video, I'm going to illustrate an example of paying off a student loan using a personal line of credit, credit card, or if you have a life insurance policy with available cash value, how you could use that as your credit line to make chunk payments using the velocity banking method to pay down debt. So in this example, I'm going to use these numbers over here. These are my data points. So I'm going to set my income at $4,500. I use a program called Empower.com that tracks 100% of all of my transactions, incoming and outgoing, across all of my different bank accounts and credit cards. So it gives me a number. My income is actually higher than this based on Empower, but I like to be conservative, so I'm rounding it down to $4,500. My expenses are a little less than $3,000 a month. It's like $2,800. But again, I'm being conservative, and I'm just going to say $3,000 for the monthly expenses. Now, the starting balance on this loan is going to be just under $1,800. On an amortization schedule, that payment is going to be $124.98, and the rate on this particular loan is 3.84%. This is a student loan that was refinanced through Earnest.com. Now, the credit line that's going to be used in this particular example, again, is cash value from a life insurance policy, and there's a $5,500 line available, and the loan rate through the insurance company is 5.25%. So a little higher than that amortization loan, but if you're familiar with velocity banking, you know that these rates don't matter nearly as much as how those rates are applied. And so I'm going to show you how we can use chunks of that cash value to pay down this loan at an extremely accelerated pace and pay much less in interest. So you'll see here I have illustrated 12 months of loan payments, and this is if one was to just follow the typical amortization schedule laid out on the loan. And in that 12-month period, there would be $675 of interest volume paid out on this loan. Okay, $1,500 worth of monthly payments made, and the balance is only going down by $824. So even after an entire year of payments, you'll see here that there wasn't a big change in that balance whatsoever, and there's a long time left till this loan gets paid off. So using the velocity banking strategy, if we pull $5,500 from that life insurance policy cash value and we make a chunk payment on that loan, it's going to drive that balance down to under $12,500. All right. Now that balance gets transferred onto the insurance policy or the insurance policy loan, but we're going to then deposit all of our income into that policy loan and then draw the expenses out over the course of the month, right? So we're keeping that balance really, really low throughout the course of the month, and that's going to decrease the amount of interest volume that's paid out as well. Okay, so here, based on the income and expense figures that we talked about, okay, those policy loans will be paid off every 3 months. So we can make a chunk payment on month 1, 4, 7, and then we'll pay off the entire balance by month 10. Okay, so with this, without making any changes to somebody's income, expenses and lifestyle. All we're doing is just changing the format and the way that we're paying down these principal balances. So as a result, over a year's time, this loan gets paid off in under 12 months. There's a total interest volume of less than $250, and there's no more balance to be paid. Okay, so all of this interest that one would end up paying over the course of years and years and years is completely eliminated by using this method. And in addition to that, after month 10, there's no more $125 payment either. So that payment is then recaptured into one's monthly cash flow for the rest of their life, okay, assuming that they don't go and start applying that somewhere else. So hopefully this example was helpful. If you have any questions on any of this information, just drop them in the comments below, and I'm happy to jump in and answer those questions for you. If you have an example that you'd like to see illustrated like this, just go ahead and let me know, and I'd be happy to do that for you. All right, so thanks for watching this. Again, if you like this type of content, go ahead and subscribe to the channel and give the video a thumbs up. That really helps me to know what type of content you guys are really connecting with and what you get the most value out of. So again, thanks again for watching. Have a great day, and we'll talk to you on the next one.